Facebook under fire from law enforcement today, being sued by the D.C. Attorney General. This, as a New York Times article says, the company was sharing user data with other tech companies. Julia Borson's here to explain why this could potentially be a costly issue. Julia.
Well, Melissa, it's already been costly for the stock. Facebook shares fell over 6% earlier today. Now they're off about 5%. The latest is a lawsuit from a Washington, D.C. Attorney General Karl Racine over privacy violations stemming from the Cambridge Analytica scandal. Attorney General Racine saying Facebook failed to protect the privacy of its users and deceive them about who had access to their data and how it was used. The AG's office saying the maximum damages that Facebook could incur is $5,000 per violation. For the D.C. consumers affected, that would be $1.7 billion. Facebook responding to the lawsuit saying, quote, "We're reviewing the complaint and look forward to continuing our discussions with the attorneys general in D.C. and elsewhere." Now, this comes after the New York Times reporting that Facebook gave Microsoft, Amazon, and others access to user data, including email addresses and phone numbers, reportedly giving Netflix and Spotify the ability to read users' private messages without their explicit user consent. Now, Facebook responding to that report that they are winding down integration of partnerships and saying that their partnerships and their partners do not get to ignore Facebook's privacy settings. Netflix, Spotify, Amazon, and Microsoft all telling us that they respected user preferences. But the big question here is whether Facebook violated its 2011 agreement with the FTC that barred it from sharing user data without explicit user permission. Now, violating that agreement could add up to billions of dollars in fines. Back over to you.
Julia, when you read through this article, it is so damning in that it seems like a list of the who's who in Silicon Valley who have sort of tapped into all of this Facebook user data. Is there any risk, I mean, according to your reporting, that these other players, Netflix, Microsoft, Spotify, that they might be in jeopardy in some way?
Well, it's interesting because I've talked to all of these companies many of these companies that were named in that New York Times report, and some of them said that they didn't even understand or could not even imagine that reading Facebook users' messages was even something that was on the table. That's why they were so surprised to see the report from the New York Times. I think one thing that's really interesting is a lot of these companies are no longer as integrated with Facebook as they used to be. Take Netflix. Its social efforts really fell flat, so they just don't integrate with Facebook anymore. But a lot of them are advertisers on Facebook, so you have to wonder, if you're a Netflix or a Spotify, do you not want to be associated with Facebook, and will you start to pull back those ad dollars? And I think the same thing could be said of big brands in general. Will we start to see these negative headlines really impact those big brand advertising dollars?